focus. Ideate, innovate, enable. Presented by Bank of America, the Leadership Series, Transforming India, in association with CNBC-TV18.
Hello and welcome to the Leadership Series, Transforming India, presented by Bank of America. Now, as India transforms in the Amrit Kal, and to capture the potential that lies ahead of us, the cornerstone of success is going to be building sustainable businesses in various verticals. How to do that? Well, we have an esteemed panel of experts and leaders, business leaders with us to discuss exactly that. Let me welcome on the show Arundhati Bhattacharya of Salesforce India, Amit Chandra from Bain Capital, and Asit Bhatia from Bank of America. Ladies and gentlemen, thank you so much for joining us, and at least the panel is sustainable, right? So Arundhati, beginning with that, your experience, expertise and interface with so many companies where you have played the role of a banker and an advisor to so many types of companies in different verticals and of different sizes. What do you think are the key requirements for building sustainable businesses that entrepreneurs of today's India need to learn?
The first and foremost is that the business or the entrepreneur needs to have a vision. Needs to have a vision about where they want to take the company, how they expect the ecosystem to evolve, and they need to therefore work in a manner that future-proofs the company. The number two thing I think that is very, very important is a very large measure of good governance. So corporate governance is not something which should be just something that you pay lip service to. Corporate governance is actually required to be lived. And the third, which is very important and last but not least, is the capital structure. How do you ensure that the capital structure of your company, that is the mixture of equity and debt, that they are properly balanced?
Well, Amit, I've known you for so long. Private equity has really played a very critical role in growth capital for many companies, and you have done that. It's not just capital, but it's also expertise, advisory, and a lot of stakeholder rights on the board that private equity brings to the table. So in your view, what are the basic tenets of creating sustainable businesses? Which are those businesses which really last longer than the others?
You know, at a basic level, actually, it's quite amazing that the fundamental truth is that businesses don't last long. If you step back and look at history, how many companies in the Dow actually exist every 100 years? You'll find that, every 100 years, most of them, more than 90% of them get replaced regularly. So the mortality of companies is very, very high. It's same about Indian companies as well. If you look at how many companies at the turn of independence actually still are thriving at this point of time, you'll realize it's no different. And so really, what is it that, sets apart companies which, grow and prosper? Many of those things are the things that Arundhati talked about. And I would, stress that in addition to some of the things that she talked about, I would probably, say there are 2 or 3 more things that are really important that, leaders of those businesses through generations do not lose sight of. The first is investment in people, which is really building high-performance organizations. She talked about governance. I think that governance is, whether it's at the board level, it's also importantly leaderships, and importantly the transition of leaderships over the years. I think that's very, very important. The second is, very meticulous focus on cash flow and unit economics. If you see value creators, wealth creators over long periods of time, and it's very interesting, wealth creators over the last 10 years, 20 years, 30 years, you'll find out that those who have a combination of high growth and high superior cash flows are the ones who consistently create wealth over periods of time. So this, relentless focus on capital efficiency is very, very important. And of course, the point that she talked about, accidents happen when you lose sight about your capital structure, because we live in volatile times. And those volatile times basically means that black swan events are likely to hit you at some point of time or the other. It could be triggered by something domestic, or it could be something international, something completely out of your control. And if your capital structure doesn't give you the luxury to protect yourself in that time, you will basically collapse. And so the ones who endure bad times are the ones who actually plan for, good times.
Asit, Bank of America has so many clients. In your interface with the clients, what is the kind of advisory that you give in order to enable them for sustainable businesses and sustainable choices in businesses?
It's a very interesting question, because sustainability is the core of what Bank of America is all about. When you talk to Brian, his whole thesis is responsible growth, and that's what is all imbibed into us. And when you're talking about responsible growth, we've obviously set benchmarks and targets for ourselves. I mean, he's gone on record to say that Bank of America will do $1.5 trillion worth of business over the next 8 to 10 years in sustainable businesses. And he's broken that up. He's saying there are two bits to it. One is what we all understand well: lowering carbon emissions, ensuring we support renewable energy. That's one part of the business. Second part is going into social inclusion, diversity and inclusion. That's what we genuinely believe in. What are we doing as a bank? Every industry is different. So whether you look at the cement industry, the auto industry, new age, each one of them has different sustainability targets, or targets that they should get into. As a global bank, we have the best in class, or what the best in class has done. We, in our geographies that we operate, we imbibe these and educate our clients here to set up what we call sustainable solutions. We use those, and then we tell our clients, you please put this into play. And it's not only important to put this into play, but then have key performance metrics which need to be put out to investors regularly, and more importantly, the impact of putting all of that in place. All of this actually ends up building a very, very sustainable business, and that's what we are trying to imbibe into our clients.
Yes, and there's a lot of advisory enablement and tools now available in the market. But Arundhati Bhattacharya, we don't need to really import sustainability tenets from overseas. We have our own exemplary companies, and there are so many conglomerates who have thrived for so many years. So what, in your view, is really required for having companies, set up companies which can last this long?
So, I'll just go back to the company that I used to head, which is the State Bank of India. It's about 218 years old now. And in spite of the fact that it has had its own challenges, it is government majority owned. And as a result, that gives it a discount in the market. But I'll tell you that this particular organization, the reason it has lasted so long is because it has had people in it who have been able to envision the future, to anticipate it, and it had the willingness to evolve and change. If you just have the vision, that's not enough. You have to execute against that. You have to learn to evolve. You have to learn to evolve with the times, and if necessary, change things around altogether. That's one thing. The other thing I think is that you need also to feel that you are relevant to the community that you are serving. Okay? So if you look at State Bank of India and the way we have served, whether it be a government agenda or otherwise, MSME lending started with SBI. Agricultural lending started with SBI. Even the PMJDY, which is the Jan Dhan Yojana, that was something where we did the maximum share. We did the real heavy lifting for that. And without that, the primary, opening of the accounts, none of the other things that happened subsequently would have happened. Your UPI today is a success because everybody has a bank account. And because they have a bank account and because you have the QR code, so many people who were not bankable have now become bankable. So whether it's your corner panwala or the fellow that you have your pani puri from, they now have an income stream that is actually documented and enables them to leverage it for more debt, and therefore it enables them to use it as an investment for growth. And the fact is, even the company I am in right now, which is Salesforce, Mark Benioff, who's the founder, very clearly says that business has got to be a platform for change, and it has got to be a platform for change for the community. So we have what is called a 1 by 1 policy, where we contribute 1% of our profits, 2% in India because of the law, 1% of our products, and 1% of our time for the non-profit community. And they have now created a 1 by 1 club. We are the founding member, and there are 17,000 other corporates that have adopted the same principles. So we all get 1 week's paid time off in order to go and do volunteering work.
Very well said, Arundhati. And this profit with purpose is one of the cornerstones of business best practices, and also giving back to the community. So we'll take a short break. Hold on to your thoughts. We'll talk more about disruption, and especially technological disruption, and how to stay relevant and build sustainable businesses right after a very short break. Stay tuned.
Presented by Bank of America, the Leadership Series, Transforming India, in association with CNBC-TV18. Presented by Bank of America, the Leadership Series, Transforming India, in association with CNBC-TV18.
Welcome back to the show. We are discussing the clear tenets that can really help entrepreneurs build sustainable businesses. Now, Asit, what are those pillars that Bank of America really works on in its advisory role to empower companies to become more sustainable?
For us, each company and each industry vertical has different sustainability targets, and we use our global platforms to ensure that we use the same thing in India. These are best practices that you can get. But very, very importantly, as ma'am mentioned, this is not only important from an issuer or corporate perspective, but also from an investor perspective. And I think Amit talked a bit about that. And again, like I said, this is important from probably three perspectives. Said, profitability with sustainability, very, very important. Number two is from an environmental perspective. And number three is from a diversity, inclusion, social inclusion perspective. And for each of these tenets, we would have specific guidelines that each of these companies need to imbibe in, which are then measured. And when measured, then what we do is we will put all this together, and then we will marry an issuer and an investor. So we do stuff like we did the first green bond that ever got done out of India. We did the first sustainability loan that ever got done out of India. We've done a sustainability bond very, very recently. So that's how we are marrying the expertise of the global bank with what we should in India imbibe between both the issuer community and the investor community. That's something that we've been very proud of doing.
That's right. And Amit Chandra, you gave a lot of pointers on what could really lead to the businesses which can be unfazed over a very long time and can face adversities. I want to understand, in terms of disruption, in the face of disruption of any kind, and right now what we are seeing is technological disruption. Our banks had been very fast in really imbibing technology and are really doing well in that particular sphere as well. But do you see that across the board, or is it mostly dependent on the leadership and vision of the leader?
It is the leader who, sets the pace, the tone, who makes the investments, which often go against the, conventional wisdom, because markets, I don't want to sound very, critical of markets, but markets, as Mr. Kamath used to often say, are focused on QS duty, which, is quarter se quarter. And, investments often go against the grain of that because they have their own germination cycle.
Right.
And so I think it's, if you don't make those investments, you'll often suffer, because you'll see great short-term results and then you'll see really poor long-term results. And that's where leadership really comes in. The ability to basically make those investments and yet be able to communicate to the market, to be patient that you're making the right investments because they will ultimately pay off. Great example, again, the YONO application of SBI.
Exactly. And
terrific
taking off
example.
from there, Arundhati, you have been reinventing not just the company that you lead, but your own self. Because under SBI, you took up the task of the challenge of technological disruption. YONO was launched under your leadership. And after that, in your own career path, you joined Salesforce, which is a technology company. So what do you think the entrepreneurs really need to understand in terms of capitalizing on the new age tools that really come in front of them and to change their setup in line with the changes in the environment?
So, today, if you look at the startup community, what I admire about them is the way they think. So, what they do is, unlike legacy industries, which basically have a tendency of going inside out. So, you create a product and then you go and sell it. What the startup industry does is just the opposite. It goes outside in. So, it looks at a business process and it says, this is a place where there is a customer pain point. Let me pick up that customer pain point and solve it. And from that beginning, then it starts sort of branching out in order to solve more and more of the customer problems till it has become a full-scale business. So, I think the ability of those entrepreneurs who are doing this, who are actually solving the customer problems and creating ease of use, creating more opportunities for businesses by looking at them from the outside, determining what the problems are, and going after them in a single-minded way in order to make it easier for them, they are the ones who are actually thriving. Because unless and until you are relevant again to the business and you have made a substantial difference about how the business does its work, it's very difficult to break through. And I think legacy industry actually needs to learn from the startup community as to how they are doing this.
Amit, some of the mistakes that entrepreneurs make, we have seen dilution, equity dilution also too early, but then that can be always debated.
Yeah. So, Nisha, we have a joint venture with Mr. Piramal's group, which does distressed debt in the country. It's been a very successful venture. The returns have been great, and so that's given us a good window into the question that you've had. I would say that generally there are 3 or 4 kind of mistakes that people end up making. The first is outright fraud. And the good news is that thanks to everything this government has done, the incidence of that is reducing, but there was a lot of it maybe 10 years ago. And so a lot of businesses just went under because people were used to taking cash out of their companies, and Arundhati would have seen a lot of that. Second is what Arundhati talked about, which is imprudent capital structures, because you lived on hope that everything would go well. And guess what? Everything doesn't always go well. There's always a black swan event, either globally or locally. And in India, we had COVID. Sometimes there's an Asian crisis. China will basically do something to pricing. And that capital structure is not, robust enough to withstand those kind of shocks. And the moment you have that, you basically, go under. The third is simply greed. You may not have done either of those two, but you essentially bet the house. We had a lot of that in India. Sometimes that betting the house happened in the operating company. A lot of times it actually happened in holding companies. And Asit can talk a lot about this, because we saw so many NBFCs in particular get hit because of, the third factor. So that's the third thing that we have seen. The fourth thing that we have seen is more prevalent in the growth and venture capital segment, which is this desire to basically not get diluted with the hope that valuations are rising really rapidly, and you will therefore see a better tomorrow. And when that is actually combined with a really quick burn rate, which many of these companies, were typical of, you are sitting on a powder keg, which is lit. And any correction in the market, which is like the funding winter we have seen now, exposes you to serious risk. And so those are the four kind of, categories that you see, and those then create opportunities for distressed funds to come in and participate. But I think if you're a founder who's trying to avoid accidents, I think you should just avoid these four minefields.
In the recent past, I think the learning, one big learning that I will take is also have sustainable valuation expectations.
Oh, which is the fourth bucket.
Yeah, so I think that just stands out in the present moment.
But I wanted to add, and I couldn't agree more. I think capital structure is of paramount importance. We've often seen, expected pop in value, so therefore let's not, dilute now. At the same time, we've come out of an environment and continue to be in some form of an environment in which there's a tremendous amount of liquidity flowing in. And there are, I mean, to your point, lenders have been very, very happy to provide, provide debt. And in an environment, maybe not so much in India, but even globally, in a very low interest rate environment. So when you found rates moving up by 4, 5, 6%, it's suddenly starting to hurt the bottom line of the issuers. And as ma'am was mentioning, it's like a running taxi. It's okay when it's it's 0, 1% that you're paying. Suddenly this thing becomes 5, 6%. Margins are wiped out and companies go under.
So cash flow management extremely critical, because everybody asks what's the bottom line. Final word, Asit. Do you see the motivation, aspiration? That's what drives the entrepreneurs. Do you see that brimming in the new entrepreneurs or smaller entrepreneurs? And do you also have that insight that many sustainable businesses are going to be formed?
I actually am a firm believer. This is India's time. Really, if you think about what we've gone through over the last 3 or 4 decades, where India has held a lot of promise, but hasn't necessarily always delivered. When you look at the last 10 years and probably the next few decades, we actually see an environment in which India is going to be very, very conducive to doing business and very good business.
I think the overall ecosystem is exuding a lot of confidence.
Lot of confidence.
That. And I think that will be the big thing, but a lot of learnings and a lot of important takeaways from this discussion, which I'm sure our entrepreneurs will take note of for capitalizing for this Amrit Kal. Thank you so much, Amit, Asit, Arundhati.
Can I add just one line?
Sure.
This is a small jingle that we learned as very young bankers, which is top line is vanity, okay? Bottom line is sanity, and cash is reality. If you don't remember that, that business will not sustain it.
Golden words, nugget of advice, and we'll thank you for that, and thanks all of you for joining in with all your valuable perspective. With that, we have come to the end of this riveting discussion. Thanks so much for tuning in.
Presented by Bank of America, the Leadership Series, Transforming India, in association with CNBC-TV18.
Focus, ideate, innovate, enable.